Hi, welcome to our very first episode of Altyverse. This is a podcast for mortgage professionals who want to break out of the box and really get to a point where they can master the non-QM market. I'm your host, Gabe Gillen, and today we're kicking things off with a true powerhouse in alternative lending. I'm joined by Paul Jones, Senior Vice President of Business Development at Logan Finance. He's one of the most respected leaders in the non-QM space. So here's why this matters, right? Borrowers' profiles are changing. Traditional guidelines just don't fit today's reality. And non-QM is no longer a niche or a niche, as we've once said. It's now a strategic advantage. So this podcast is all about strategy, scaling, and staying ahead of the curve in alternative lending. So Paul, welcome to Altyverse.
Thank you for having me, Gabe. Excited to be your first guest on what should be a really exciting outreach to our industry. Thank you.
No, I agree. And I couldn't imagine a better guest to launch this show with, Paul. You've been in this business a long time, and I mean, I've known you probably since non-QM came into existence, right?
Yeah.
So for anyone who's listening who doesn't know your background, could you just give us a quick version of kind of the path in the mortgage industry that got you to where you are now at Logan Finance?
Yeah, absolutely. Just, started off, right out of college into mortgage lending in underwriting of all things. Was a little bit more of a deal maker even then. So I moved into sales. And with sales comes a lot of training and the responsibility to help your customers understand products. Natural progression, going through a few different organizations. I landed in non-QM about 8 years ago, just as you said, the inception of non-QM, right? It was 3 companies maybe that were materially involved in the marketplace. But my role coming into it was to help people understand the products. And while teaching others, I was learning a lot of trial and error and a lot of understanding of where the opportunities are. And which led me to last almost 2 years now at Logan Finance, which is really a really safe, comfortable lender that's in this space that's helping people understand a lot more about more than just products, just the market overall.
The non-QM hasn't always been known as safe, right? I know you just mentioned how Logan's a safe company to be working for. I know for over the years there's been some ups and downs, but I think today, would you say that kind of all the little potential issues and like the things the kinks that had to get worked out, you think they're pretty much in a good spot now?
I do. I think the initial thoughts around non-QM was that it was subprime. It had familiarity to it that was outside of agency. So anything that falls out of agency, people just called subprime before, the crash in 2008. Now we understand the risk aversion in this space and where the opportunities are that we're going to talk about today, and how to help people understand, while everyone has a bank statement loan or a DSCR loan, what are the real driving forces underneath within the guidelines themselves that will help choose the right partner, find the right customers, and build your book of business as you continue to originate other loans.
It's amazing to me how there are some loan officers out there that they just want to stay in this box, like this conventional or FHA, Govy, refi, or purchase. Like they just want to stay in this box because they feel like they know it well, they're comfortable with the guidelines, and just to expand, because there's so many different like intricacies and differences, whether it be loan to values or calculations of income or interpretations of how to calculate the debt to income ratio, which is called a DSCR on a rental property, right? Because all these lenders do it differently, you really need to have the tools, or you need to have a great resource to really be able to navigate that, right? One of the things that I've been impressed with Logan's platform is the service, right? So the service from between the AEs to people like yourself who just are willing to go out of their way to educate not only loan officers but also realtors. What else would you say kind of truly differentiates Logan from some of the other players in the space today?
Well, I think it starts with our parent company and our capitalization, being able to create the right product that serves the market today, to build some of the key niches into those products And again, by removing some of the risk, giving us better pricing execution. So having just the right product, being middle of the fairway, but still aggressive really helps. From there, I think it comes down to having the right salespeople and resources that are focused strictly on non-QM, that have the knowledge, expertise, and time to put into structuring loans with people, showing the resources that help them structure loans. We have a scenario desk like many others do, but the outreach my business development team does after someone has done a scenario with us ensures that they can continue down the field with that particular deal they're working on. Do they understand everything else that is happening? Have they been trained on our technology and our platform to deliver that loan? Because many times people are working with different partners and they don't know how to send that loan into a particular portal the right way, and that becomes a challenge even if the deal fits the box, right? So it's just having all the edges covered from the very beginning throughout the process and even after the process that makes this product feel realistic, attainable, and scalable. So you'll want to go back and do a lot more and build your book of business with it. So Logan really puts a lot of time and thought leadership into those concepts. And I don't think we're ever just sitting in a room as leaders in our firm without coming out with actionable items to continue to take the experience for our customers to the next level.
All right, cool. Now, would you say that non-QM is a part of the business that a brand new loan officer should be scared of or should shy away from? Should they kind of cut their teeth with conventional and using DU and LP first, or or do you think that non-QM is a for a brand new loan officer would be a space where they could actually dive into that and really focus on that as a difference?
Yeah, I recommend to anyone, whether they're new to non-QM, they've dabbled in it, even if they've done a lot of it in the past, it's okay to focus on one particular product. If you're especially new to the business and you're learning a lot of the terminology and learning a lot of the technology, you're figuring out your brand and who your partners will be, you can take a DSCR product, which removes a lot of the standard documentation requirements. You can kind of start building some marketing around that, building different connections with that marketplace, those types of customers, while you're still kind of building up your business with other products that are out there today. We all need a lot of different tools in the toolbox today to be successful. So I don't like to see loan officers dive in headfirst to all the products sometimes. Oftentimes, that's where the confusion comes in. They forget what DSCR is, and then the next thing they're doing a bank statement loan. The next day they're trying to do something with assets or with a foreign national. Just take the DSCR product, for example, we offer, and it's 1 to 4 units, 5 to 8 units, no ratio, foreign national. It allows for non-warrantable condos. And think about all the potential borrowers that are out there just that need that product. And the good news for a loan officer who right now might still be dealing with a little bit of a knife fighting over rates, right? The real estate investor, far less concerned about a rate. As long as they can get a property at cash flow, they're going to buy one, buy the next, refinance another, to buy another. They can really work with multiple borrowers for multiple deals and really make it simple on themselves by learning how to find those borrowers, understanding the nuance of the product, and still working the other side of their business.
Yeah, no, that's great. I think I love the fact that we're doing this podcast and that we're focusing on creating a place where we can talk to loan officers, underwriters, investors, right? Even borrowers, if it gets out to that point, where we can just kind of educate them, and because there is no one place to go, right? There is no one resource or book to read, right? I think as we find in this business, when there's a new shiny object, people really jump there, but they don't spend a lot of time there, right? So now this is something that, I guess, non-QM, would you say it started in 17, maybe the latter part of 16? Is that about when it started?
I would say 16, where people are starting to put their platforms together, find their capital, figure out what they want it to be.
Right, and then and surviving post 2020 and post COVID, now it seems like now's the time where we can put together a platform where we can kind of share more and more information, and hopefully, prepare everybody for where the market's going to go, right? So what I'd love to do is just kind of zoom out a little bit for a moment here and think about as we head into 2026, right? What do you think the non-QM landscape looks like, right now as we head into next year? I know I've read the data from, the NBA or Fannie and Freddie as far as their forecasts and what they're expecting. But from you being a boots on the ground, seeing the loans, talking to the people, talking to the originators out there, doing the business development, what are you seeing and what do you really think 2026 is going to look like as we get into it and get ready for that to roll out?
Well, it's a few different things are going to influence us. We still don't really know where the real estate market's heading with rates, and no matter what the Fed does, which we know doesn't directly influence it, but influences the consumer and their opportunities for home ownership and what they perceive and worry about economically. So we don't really know how things are going to affect the borrowers in that direction. But what we do know is that most of the people that fall into a non-QM product today are in that echelon of people who aren't as affected by some of the economic turmoil that we see today. Business owners, are usually stronger credit profiles, have extra capital. They'll buy a home tomorrow if that's what they want to do. So on the horizon, I think you're going to see margins remain strong on the product itself. I think you're going to see more automation in terms of underwriting and adding more efficiency, potentially reducing cost per loan, which is good for the non-QM providers in that sector. And I think you'll see more loan officers diving in. And hopefully right now, my advice to the loan officers is to start setting that stage. I mean, I say we're in 2026 now. Let's just say it. Here we are. We're into next year already. That time and energy and focus you can put into learning a few elements or getting stronger with the product is only going to make you more prepared for when we know if rates take that tipping point that brings borrowers out finally, houses, more houses go on the market. It's going to include a population of non-QM borrowers that you didn't even have to source. So why would you turn away someone today or even in the future just because they don't have tax returns, but they're self-employed? Why would you not consider all those extra investors who will come out, who are going to say there's a lot more deals on the market today, I'm going to buy a few more properties, and not be prepared by understanding your DSCR products? So I think right now, set the stage and be ready because, like I said, the margins are better. I see people jumping in every month to the non-QM space, new names all the time. Prepare yourself with a partner who has, just the right resources, intelligence, thought leadership, support to help you. But right now, I just think, making a cleaner, faster, stronger non-QM loan is what everyone that I talk to wants to do. All those meetings I sit in at Logan are trying to figure out how to really even make that process more seamless and easier than ever.
Yeah, it's definitely interesting that, with affordability, home affordability just being at, maybe an all-time low or at a low, recent low, right?
Yeah.
And the cost of new construction, like we clearly have a housing shortage, but what we've seen more and more of is that the investors, those that want to buy because they have a rental plan or that's part of their income, right, or part of their business. To your point, it's about the property, right? It's about the cash flow. It's about they're not to say they're rate agnostic because there is competition because there's a lot of competitors out there, right? There's a lot of buyers and investors that want this paper, right? They want to service this debt. Because it's been performing. I don't know what the numbers are, but do you have any kind of stat or any kind of data that you may have heard or seen recently that kind of talks about how the performance of these loans are? Whether it's debt service, bank statement loans, even the foreign national side of things.
Yeah, statistically, I would veer from that, but I could say anecdotally. Because of what you were seeing in terms of the rates, the margins, the appetite in the market, the product does perform. Right. What we see as a company that ensures our strong performance on loans is mid 70 LTV, mid 700 credit score, stable borrower, skin in the game and strong credit is the entire theme of our pipeline.
It makes a lot of sense.
We're priced for that. We don't really need that fringe or niche outside of the box, or the niche within the niche, if you will. We really try to stay with those true borrowers who are out there today. And that comes with a lot of nice things too. It comes with higher loan balances. ALBs, jump into the 700, 800K range on these products. So performance will remain strong as long as we, continue delivering product that's in that LTV and FICO sweet spot.
So I think a big part of our mission to get out there and to educate people and to be a resource, where we can bring experts like yourself, Paul, and bring them to our audience, right? Is to clear up to tell the facts and talk about the opportunities, right? But also to clear up the misconceptions, right? So there's definitely some misconceptions, I think, around, amongst loan officers. Some of the ones that I've heard are, that it's too competitive in this space, right? It's too difficult, it's too much to learn, or it's too hard to qualify, right? And it's just not true, right? From practice. Any kind of misconceptions that you've heard recently that you're just like scratching your head afterwards? You're like, we just need to educate these people.
Well, the one that you mentioned is, the difficulty in qualifying the loan.
Right.
If you really look at the majority of the marketplace in non-QM, we're solving for income. If you're working with a partner who can help you solve for that income before you originate the rest of the deal, or you go too far down the path, then ultimately you're still dealing with the same loan you always were and always probably will be, based on what we know. So if I solve for bank statements and use that income from a set of 12 months of bank statements or P&L or assets for income, I'm still getting the standard credit report. No one's invented a non-QM credit report yet, thank goodness, right? I'm still getting 2 months of seasoned assets for my down payment, closing costs, and whatever reserves I'm required. The appraisal remains the same. Disclosures can sometimes even go out the window depending on the product. If it's an investor product and considered, business purpose, I don't even have to have the same disclosures. So I'm actually reducing documentation. So ultimately, I just advise that any loan officer who has that misconception, as one example, sit down with an account executive, sit down with their own internal resources and find out, how do I solve for X? Once I solve for X, the rest of that loan should be problem-free. Now, more and more people, including ourselves, are moving into a world of automated underwriting. So some people love that idea. It's great. Some people love, because we're old school non-QM people, believe it or not, we can call ourselves old school now, right? It's 8 years, 9 years in. Some people and I've talked to other account executives at our competitors, they like structuring that loan and not being in a box and just sitting down and structuring a loan with someone, and saying, okay, did you get this? Did you get that? So I think the other thing is, to go along with what I just said, is find a company and a team that will help you just take all the friction out up front.
Yeah.
Solve for it. There's questions you should kind of start getting familiar as they ask you, you start asking yourself, and then before you know it, you start asking the borrower. You bring your next deal in, say, Mr. Borrower, do you have 12 months of bank statements? Okay. Do you have multiple businesses? Okay, maybe we pivot and go P&L, because that would be easier. If you're doing DSCR loan, what are your source of funds for down payment? If you know your customer, if you know our guidelines, for example, you'll know that you can get a gift for down payment closing costs, even on a DSCR loan. So you go, okay, well, someone's short on down payment or closing costs. I know I have avenues for these things. There's little differences, right? But you don't want to make it seem like it's, you can't accomplish anything with the product, because you just have to sit down, spend time with education, spend time when your account executive is helping you structure a loan. And the rest of the loan is really basically the same nuts and bolts we've always had. I would say, like, non-QM came along years ago. We really made it sophisticated. I mean, we still do it. Some of the terms we use. We use DSCR and we use, asset utilization. I think it looks like, from the outside, it looks like a Ferrari, and underneath the hood, it's got a Toyota Corolla engine. I mean, it's really not that, flashy once you kind of get behind the wheel. You're like, oh, this thing's really, looks cool. But ultimately, I know how to drive it, and that's what we have to help.
It's not that complicated,
right?
Yeah, I've heard some comparisons where it's like, when you're, and this isn't my opinion necessarily, but I've definitely heard people say, if you're in that agency FHA space, maybe not so much FHA, because there is some problem solving, there is some creativity there, right?
Yeah.
Because anytime you get like a manual underwrite, there's some massaging and there's some compensating factors, right? But if you're just agency, I don't want to say you're a dime a dozen as a originator, but you're not. But at the same time, you are highly shopped, right? And because you're following AUS, you're asking for these documents, right?
Yeah.
So what's the differentiation? Maybe there's some kind of like skill that comes into it to qualify a borrower, qualify a loan, or figure out how to structure something. But in the non-QM space, like, I find it fun personally because I like problem solving, right? I like figuring out, like, how are we going to get this to work, right? Because it's very rare that you can't find a solution, because even if you have your guidelines, Logan has them, all the other competitors do as well. But there's also this space that maybe it's a 5% variance or something like that. That's called exceptions.
Yep.
Right? That doesn't really exist in the agency world, right? So that's where you can say, yeah, but this is common sense. Mm-hmm. Like, look, here's why this makes sense. Here's why this borrower is going to perform. And to me, that's the most fun part of the non-QM space, is that we get to use our brains a little bit more, right? And be challenged.
It's true.
And then when we do that and we do it effectively, we're becoming that consultant, that problem solver for our customers. And typically those that go into this non-QM space, they may have a exit strategy of a refinance down the road, or they may have a business plan to do the same thing over and over again, right? Buy something, fix it up, or get it rented, and then do a refinance, cash it out, and do it again.
Yeah.
So it's just I don't know, it's more challenging, a lot more fun.
We see a lot of people, to your last point. I mean, when you look at the pipeline of DSCR loans, we see, pick an uncommon name, don't use Jones because everybody, that's my alias. But we see an uncommon name and you'll see like 5 deals in the pipe from one borrower, DSCR.
Yeah.
They're buying 2, they're refinancing 3, taking cash out. They're constantly scaling. And as a loan officer, that's like manna from heaven, right? You now have 5 deals. And some of these DSCR loans, I'm starting to see the values with the home values increasing and the equity in people's homes already. I'm starting to see like higher loan sizes, like people are taking, maximizing as much as they can. So why wouldn't you, put time into, I keep going back to DSCR because it's just a simple equation, right? It's, break even analysis. It's, so if you can figure that out and connect with investors, and you can go out to real estate investing groups all around your backyard on a Tuesday night instead of sitting home watching Netflix or scrolling through TikTok, you can go out and meet investors, with the right marketing collateral, your business card. You can write a deal right on the spot. You'll definitely have people calling your phone within a few days to meet for a coffee to talk about their next plans and opportunities. And you're talking about the creative side of putting deals together. I love the creative side of how you go out there and you can find deals. I mean, if you go out to stand on the corner with a flyer and say, hey, who wants a 30-year fixed Fannie loan? No one's really going to get that in awe of you. But if you can go out to a group of CPAs, or you can go out to a group of first-time home buyers who are maybe, gig economy, young people that are kind of different income streams that's just not as normal or maybe a little more complex, or you can go out to real estate investing groups. I mean, you can go out to any number of referral partners with 1 or 2 products and find the opportunity. You can market yourself to different groups through social media. It's limitless in terms of where you can find the true non-QM borrower. And then with that, I think you can eliminate doing the accidental non-QM loans, which are the ones that you're trying to constantly fix the broken deals. You can actually find deals that fit the box from the beginning that you're going to go right on through. And to your point, I love that point. I don't bring it up very often, but I think it's truly true. You're setting yourself up for future revenue and future opportunity, because those borrowers will come back. Maybe they need a non-QM today and they need an agency loan tomorrow. Maybe they wanted to do their first investment property, and now they love it and they're going to do 2 more and maybe get a family member involved. Maybe they're in DSCR borrower, but they're also self-employed and they're trying to do something with their primary residence with their bank statements or a P&L. It's any number of things you can do that, you can't do with other products necessarily.
And that was a great segue too, because I really wanted to get into kind of some of the tactical side of things, right? Like, you have, and you've met and are probably aware of some of the top originators in this space across the country, right? I'm sure you've interacted with them, you've met them, you've probably been on a panel discussion with them, right? Talking about what's their trick, right? What's the one thing? But, rather than talking about the one thing, what do you think, what multiple things or various things separate those that are really performing at a high level, versus those that just aren't, quite yet, right? So from the non-QM top originators that you've seen, what are they doing differently, in your opinion?
I think one, they're building a brand with it, right? They're being like the king or queen of something that touches the right types of borrowers. They're taking the complexity out of it. Like I said, we have had so many terms and terminologies. We got to get away from the jargon in non-QM and just when we're talking to the borrowers, keep it simple. And I think they're consultative. I think they're really laying out all the options and walking people through it in a more of a concierge fashion. They're not just transacting, right? They're creating the experience for someone who may have been told by 3 other originators who can't spell non-QM that they couldn't qualify. They're like, hey, I don't know what to do with you. Go down the street, kick rocks. We'll figure it out. And they're getting someone who ultimately can be helped, and are showing them how possible it is to help them. And I mean, I've talked to people who have done bank statement loans for small business owners who never thought they'd be able to afford a home, and ultimately they can afford more home than they ever thought. They afford a house, like 3 times what they imagined because of using some of the products that we have available, and we're setting them up for success. So I think those guys who are just dug into it, they leverage their network, they leverage their referral partners, they are clear, they set right expectations with their partners and their borrowers, and they're really the tip of the spear. They're the leaders of this whole thing, and have everyone kind of working together to make sure they're clear, concise understanding on what's going on here, because it isn't always your typical loan. To your point, there could be an exception needed. It could take an extra day or two. There could be some additional documentation, even though I said I'm going to only look at your bank statements, but now I have to show something from a receipt to prove that a large deposit was really what it is. There's little different things you have to do. So they have to really be, good at helping people navigate the process and clearly understanding it themselves. And that's the big difference. That's the big difference with loan officers, the successful account executive I get to work with, the operators in our firm, at the top, all understanding it. This is different, but you can, be better at communication, clear transparency, and, just a direct knowledge of what you're helping that customer get done.
And my hope is that there's gonna be a lot of loan officers listening to this, and they may be real strong in the conventional in production, right? But maybe they're nervous about their first non-QM deal. And I think in this space, I mean, correct me if I'm wrong, Paul, if you disagree, but you almost have to skin your knee, in your first deal, right? You almost have to submit a deal to learn and to understand the different nuances or the different things that could come up, because otherwise you really won't get a good understanding for it, right? You can hear from other people, but it really comes down to, I think, the sales leadership or the sales support, or from the investor side, like Logan and yourself, to just kind of hold that person's hand through that experience. Because to your point, right? All right, it's a simple 12-month bank statement calculation. We'll get the deposits. We'll figure out what kind of expense ratio they have for their type of business, what industry they're in. But then there might be a large deposit, and maybe they can't get an invoice to prove it, to support it, and then, or they can't support what that deposit was, and gets backed out. They won't ever know that is possible or that could happen until it does. Right.
Right.
And go ahead, please.
No, I was just going to say, and it comes along with, I feel like, I've been doing this for so long. I feel like I sometimes say the same things over and over again, but there's an endless audience of people that still want to learn about this. But we were talking, when we were preparing for this call the other day, we were talking about training as well. And I'm like, how many times can I mention the word training without, being inundated, right? Having tons of people sign up for training. Training will, I mean, you can talk to some of the biggest leaders in non-QM that I've worked with and people that are good friends of mine, and they still push training. And the way I push training is it's not just one training call. If I do it, if you were to say, hey, I'm doing a podcast, and you do one podcast and you're like, I'm done. I did a podcast.
Yeah,
you want to continue a series.
The world is better.
Right. Series of education, series of awareness, an ongoing set of skill building sessions that help someone get better. So what I like to do is sit down with someone before the training and say, what do you really want out of this? Let's customize it. I can give you one general bland deck that tells you everything you want to know. But what's going to matter most to your audience? Do your guys need to understand how the DSCR calculation works? Do I need to go deeper into the alternative income products and what the nuances are there? Can I help them start to build a marketing plan and a strategy around finding the right borrowers? Is it just foreign nationals today? Will it just be condos next week? What are we doing from today? Being, let's pretend, it's January 1st, let's pretend. And what are we doing January 1st? What are we doing mid-January? What do we have set for February through the rest of the year? So we can do a 30-minute session on 2 or 3 things throughout the year. So there's something that keeps them coming back learning. I didn't learn, math in a day, right? And so we have to remember it's still an education process at the end of the day. And we have to understand the skill set of the audience every time we go into a room, and we expect people to actually pick up on these products and want to use them in the future.
So I have 2 more questions. Then I really want to talk about marketing and where to get this business. But I think it would be important because there are going to be some loan officers who have never done this before. If you could just share, whether it's a number one mistake or something that you kind of cringe when loan officers are submitting their first deal. Is there something that if you could turn back time, you would give this advice to every single loan officer before they submit their first deal at a non-QM space?
Yeah, I mean, I think there's 2 things I recommend every loan officer do for their first deal or maybe their 10th deal. Is even if it's been qualified through your pricing engine or whatever portal you're submitting it through, sit down with whoever your account executive is and just go through that deal one more time. It could take a matter of 15 minutes. That account executive is going to probably ask you a couple more questions that are going to be relevant to that deal passing the test. So I think that's the biggest thing. And if you're not able to connect with your account executive, just read through, not your full guidelines, but every product, at least the way we have our products laid out, every product has its own matrix. And within that matrix are the LTVs, mins, max, FICOs, all the buckets. But beneath that, you're going to find a lot of key need to know information that's in there. A lot of key things, whether it's this product requires 6 months reserves, or, these are the trade line requirements. Again, we're not running these through an automated underwriting engine. So you need to make sure you have your minimum trade line. So yeah, they have a FICO score of 700, but do they have all 3 trade lines to meet those standards, or are they down to 2 that meet the standard, which is okay as well? Those are just little things that, we forget about because DU does it for us normally. So I would recommend just either sitting down with whoever your account executive is and making sure you've dotted every I and crossed every T. You're going through loan setup without getting the loan kicked back, or at least you've read the matrices or a matrix for that particular product to make sure you're actually capturing not just the LTV hits and all those things, but where the changes could be. And the last thing I'll say kind of in relation to that is you could catch that need for an exception up front then and get that exception started now rather than halfway down the path and then have to restructure the deal, go back to the borrower saying you might need another 5% down, or you might need
the
this
rate goes up or what have you.
Right. So at least you have a better idea of what you're working with, even if you need an exception up front rather than surprise later on.
So that was probably what I guessed you would say, right? And I agree with you completely. What I would also add there is, kind of the idea behind the Altyverse that we're putting together here is find a community, find a group where you can bounce these ideas off, right? Like create a mastermind group, or join a group where their experts are there and where your peers are there that can really say, oh, you know what? I ran into that last week and here's what we did. Or yeah, don't worry about that, but you will need XYZ documentation, right? Just getting some people who are experts, right? Because maybe your account executive or maybe your branch manager, your sales manager, isn't there or isn't as well versed. So find a network, and that's really part of the the brainchild behind what we wanted to do with this and with this initial podcast as well. So can you give me one recent win? So this is a deal, I know you're involved in the deals and you hear about the success stories. A recent deal that simply would not have closed if it were not for a non-QM solution. Do you have anything like that you've come across recently?
The most common one I keep coming across, it's a consistent win, is your borrowers who are maybe migrating from W-2 to 1099.
Right.
Whether it's a change in structure, maybe it's a change in what they're doing for a living, but they're being paid in that same way. And even sometimes borrowers who are going from W-2 to self-employed, and they're using just bank statements now in that way. Those are ways that non-QM can be a little bit more flexible. To your point, you can look at compensating factors. So I've seen a lot of deals, particularly with the economy being the way it is, people transitioning, maintaining strong credit, having money, but to be able to move someone from one income structure to another and still using a non-QM product without missing a beat or needing much in terms of extra requirements. And that's really important right now. Jobs are, sometimes, in different industries are in peril. People are making career changes, and it becomes one more, border to stop home ownership for them, or maybe refinance where they need to today. So nothing as specific as an example, but just in the fact that that rigidness that you see sometimes with automated underwriting and fixed guidelines, keep a lot of people down. And non-QM, if you're in certain situations, it allows you to just move through that scenario with common sense underwriting and a fair approach to home ownership and helping people that are really out there just trying to win themselves, trying to help their families.
Yeah, what's interesting to me is like this new, 8-year-old segment of our business. When I think about it, it's kind of hit me while we were talking today. There's actually a larger pool of referral sources for this business than there is possibly for just agency loans, right?
Yeah.
Agency loans, maybe you're going to attorneys, realtors, financial planners, CPAs, but that's really where the sales education and the sales mentorship kind of limits and says that's where you go. But when you're looking at, and builders, of course, right? But when you're looking at the non-QM space, this could be for property management companies, right? It could be companies that maybe part of their company is in charge of bringing people from overseas, right?
Yeah.
So you could also be foreign investment groups, right? So there's so many other places to go where, quite honestly, the competition isn't there, right? Yeah. So you're not fighting for that. Who's got the lowest interest rate on a 30-year fixed for an 800 credit score borrower putting 30% down, right? That person can go anywhere. Doesn't take creativity. But in this space, there's just so many more, set places or sources of business where you could actually where you can go educate them about what product offering we have and what you can actually add to support their clients, right?
Yeah.
What's a segment or a referral source that you think some people have really overlooked, or they don't think about it in terms of the true opportunity? Is there anything else you can think of to share?
One that I kind of stumbled upon, and that's what's fun about being in our jobs. You talk to a lot of different people. You go out and meet real estate agents, and then they have one perception of the product. They've heard a little bit about it, and they start talking to you about certain things. You mentioned this about the foreign national. The foreign national, for those that to understand the product, the foreign national is someone who's going to remain overseas with their current job, who wants to own real estate here as an investment or a second home. And maybe for one reason or another, maybe considering moving here in the future. But if people want to set the stage now and get at least a property before they come over here through the process to immigrate, immigration attorneys are people that are working with people who are eventually going to become stateside, through legal methods, the time it takes, whatever it is, where it could be from anywhere around the world, with the exception of certain foreign entities. But that's just one of those unique ones. I think our foreign national product does really well. It plays really well on the West Coast. It's very simple and very streamlined. And I think there's a lot of people that are out there today that you could really tap into in that space through the people that are, working with, foreign investment, foreign immigration, things of that nature. Remember, they're going to stay where they are today. They're going to, they're just going to bounce back and forth 180 days in the country if they use it as a second home, or they can have it as a rental property today and convert it to their primary residence in the future if they decide to move stateside here. And then, it's one that's been talked about and bantered about in the past. Your local chambers of commerce, it's a great place. I think there are smaller community-based groups that you can talk to, business owners and business owners who need some of the things that we're talking about, and then franchise attorneys for self-employed as well. Cool. Yeah, the franchise attorneys. I mean, if you are getting into owning a Chick-fil-A or something of that nature, you're going to need, legal representation specific to that, or accounting services specific to that. There's franchise consultants as well that actually help people with this process. If somebody says, my big dream is to own a Rita's Water Ice or something, and they don't know how, but there's people that can help them figure out the ins and outs of getting a franchise. Sometimes people end up with 2 or 3 of them by the time they're done. Yeah. I think people that are working with people that get them, get their legs under them, maybe they're not going to have a mom and pop business. Maybe they're just going to buy into a franchise, and there's people that they really need to help them with that. That's another great place to find where business owners are. Maybe someone already owns a franchise and they want to expand, and maybe they're going to tap some equity in from their house to do so. It's any number of scenarios there. Those are some of the kind of unique ones in my opinion.
Yeah. So loan officers are always asking, I hear this amongst, internally and externally, they say, can you just give me a playbook? Like, what do I say? Right. So what would you recommend that a loan officer who wants to explain to a group of realtors or a realtor that they know, or maybe even a new realtor, hey, we have this non-QM thing, right? So what's like a simple, effective way that they can explain the value they could bring to a realtor without overwhelming them and making them be like, what are you talking about, right?
Yeah. Well, first of all, take that non-QM term and just throw it out.
There you go. Start there.
Just throw that out for them, because you have to explain QM before you can explain non-QM, and now that's your whole hour. Yeah. So you don't want to do that. And then what I always recommend, and we've done this in the past, is special financing solutions.
Yeah,
that's all. I mean, that's really what non-QM is. It's a set of solutions, and for the agents and for other referral partners, the highs, the lows, the mins, the maxes, the bells and whistles. And the understanding that loan officer has resources to solve for that situation before a buyer is even ready to go out and shop. They can actually have qualified income if they have a desk that can calculate bank statements up front, right? You don't have to have a property. I can qualify. I can get through this headache that you sometimes run into where a deal falls out of contract because the person can't qualify for their mortgage because once their tax returns got to the underwriter, they didn't have any money to afford the swing set in the backyard, let alone the house, right? So They have to understand that there's something there, that builds trust with an agent, and that these products are very realistic. I mean, even some of the numbers and the data out there might help them understand, where the high loan balances are, the types of people that can be qualified. What's interesting enough, when you talk to an agent yourself, if you're a loan officer, they're 1099 guys. Non-QM has the easiest way to qualify people that are 1099. You might get a few agents that want to, take an app with you to do their own deal, or might want to buy.
Think they can't buy a house, probably, right?
Imagine
right off the world. How am I going to qualify?
Yeah. So I mean, the basics, and I didn't do it in just explaining it, but I say the basic is keep it simple. Keep it very simple for them. You don't have to show them how the sausage gets made. Just be sure to help them understand that you have special financing solutions and that you can help borrowers, buyers go out and shop before they even, they can know what they qualify for and shop and be prepared, and give them certainty with that and with these products.
And because ultimately we want the realtors, our realtor partners, to just give us every opportunity. Let us figure it out, right?
Yeah.
Like, we don't need them pre-qualifying us for our borrowers saying, "Are you self-employed?" Write off everything, right? Like, so that's great. I appreciate it. Now,
there's a way too to like co-brand with that agent, with those products, and then if the agent understands that they can maybe tap into different network and communities themselves, because now they're in the higher loan balance world. They're not dealing with just $200,000-$300,000 homes. They could be moving into the $700,000-$800,000 $1 million home network over time as they work with those loan officers. So there's a lot of potential horse trading and brand building with the LO and the agent using these products.
Yeah, no, I appreciate that. And honestly, this has been a lot of fun for me. I want to make sure that, because I do appreciate and value all the contributions you're giving us to talking about non-QM and sharing. I definitely want to give you an opportunity to share with those listeners what's coming down the pipeline for Logan, right? Over the next 6 to 12 months, what are you excited about? Whether it's new products, new use of AI. I mean, what do you guys got going on? And I know you guys are always innovating, so I'd love to give everybody a little sneak peek. Sure.
No, innovation is definitely on the horizon for us. We're looking at a few different technology solutions, from the automated underwriting world through to improving what was a big success story for us this year, which was our portal release. That portal is probably in phase 2 of what could be a much bigger, more dynamic, robust platform to again make the experience great for the customer and the loan officer. We've really just recently expanded and offer now a delegated channel, and really hard pressed and focus on our correspondent lending partnerships and growing that state of business as well. And again, it's just really still comes down to grassroots. And I think beyond technology, it's just being more strategic and surgical and how we work with each of our partners so that we're, more than just a transaction for them. We're someone that's going to take them to the next level with these products over time as well. So I think we're just building our business development. We're staffing with incredible account executives. And from a product standpoint, there's a few other things kind of brewing. I can't really pull back the curtain on yet.
All right, well, I'm not going to press you for it then.
No, I know. But it's
something cool is coming. I know that.
The point is, we're always kind of trying to continue to evolve and just innovate and build something that's, again, realistic for a loan officer. A lot of people say, I need this, I need that. Why don't you have this product? Why can't you do it? And it's like, well, are we really going to develop something with that, or does it just look good on a flyer? And is it someone's got to knock on our door and then we do 5 deals a year with something that's shiny and looks cool? So if we're going to deploy something as an organization, we're going to make sure it actually has purpose and helps people grow their business.
I can confirm. I forget the expression, but I'm not only a fan of Logan and yours, Paul, but I'm also a customer, right? So I can say that an incredible company, an incredible team to work with, great partners, especially for learning and developing and training side of things as well. But I'm looking forward to continuing that relationship. So if someone listening right now does not currently work with Logan, but they want to learn and look into partnering with Logan, what would be their first step, Paul?
Well, they can reach out to our biz dev team. It's just simply bizdev, BIZDEV at loganfinance.com, or they can connect with us through our website, loganfinance.com. And they can, look into our products and set up maybe a consultation to go through not only our products, but look at our platform, our portal, anything that, makes a big difference to how they're going to actually partner with someone. I would start there. And we actually have a webinar tomorrow. I didn't bring the link and the registration thing because I know this was recorded, but we do a monthly series of webinars open to the public on different topics. And it's not just product, it's resources, it's marketing and strategy. Look out for those webinars. We post them on LinkedIn. Jump on one, get a feel for how we train, how we help loan officers understand the product from a different angle, and just, keep an eye on us on LinkedIn while you're at it.
Awesome. Well, Paul, this has been an absolute masterclass here, right? And it's been a great first experience for us. Really want to thank you for helping us kick off the very first episode of Altyverse. And for those of you who are listening, if you're ready to step into the non-QM game and step up your game, now is the time, right? Make sure to connect with Paul Jones on LinkedIn, subscribe to this podcast. Next episode, we're going to be diving deep into DSCR loans and how you can pitch them like a pro So thank you all for being here, and we'll see you next time on the Altyverse. Have a great day.
Thanks, Gabe.
Thanks, Paul.